Alright, welcome. New YouTube video. We're going to discuss market structure. And market structure is one of the most important things to learn. Guys, definitely hit the subscribe button, like and comment if you want to know anything. If you have any questions about this video, very happy to go over all of those questions. And market structure, it took me almost a year to fully understand market structure and to make it into practice into the charts. And only market structure, honestly, is not enough. You have to understand what external ranges are and internal ranges are. Because externally we can be stepping up, but internal price action can definitely be stepping down. And we want to know the difference between those ranges. And first I will start with just the normal market structure. We will start on the weekly on GBP USD. Then we will do Euro USD as well. Maybe another pair to give you guys a very clean understanding what market structure really is, how you can define it for yourself, and how you can create a very strong bias within the market. Alright, what I mainly do when it comes to market structure, I want to build a narrative from the higher time frame all the way to the lower time frame. So to get you guys a fair amount of understanding is that all this previous price action isn't the most important thing to understand, right? We have to identify the last range. And the last range is pretty clear because we have a high in the market and we have a low in the market. And to understand market structure, to understand highs, lows, higher lows, or in other sense, lows, lower highs, lower lows, is that what is a range and how can we identify a range? When is a break of structure occurring? And the break of structure is always occurring on the last structural break. So for example, we have price coming up over here and only here we break market structure, right? So we have a break of structure over here. So we have a bearish range from this high all the way to this low. Then price came all the way up, very interesting, into the last area, and price stepped down again. Where did it break? Here is the break of structure. So this is how we can identify how structure is building up. And this is a very important thing to understand, that markets are fractal, meaning that whatever happens on the weekly, it is also happening on the daily, hourly, 1 minute, 15-second price action. It's happening everywhere. So understanding market structure is key, right? And market structure can be applicable on any time frame. But I like to start on the weekly because it gives me a very strong bias. It gives me a very good understanding of where we are, where we're currently trading at, and which bias I want to create. So knowing that we have a bearish range from this high all the way to this low. So this is what we call our external structure. What we have over here is internal structure stepping up bullish, making highs and higher highs. Because what can we see, right? We see that we have structure bullish. We have another break of structure over here. Wait, let me make sure that it's clean. Another break of structure over here. So what would be our range, right? Is this the low that we want to look for? Or is this the low that we want to look for? And to give you guys a real concept, the concept here is that it's always the last low that breaks previous structure. So to understand what our weekly internal structure is that we are still bearish. My bad, bullish. I'm sorry, let me be very serious about this. So we have a low in the market and we have a high in the market. But what we can see from price is that we have a low, then we have a high, we have a lower high, we have a higher high, we have a lower high, and we have a higher high. So we could say that internal structure is quite bearish for some time already. So we could say that we have a high and a low. And this is how I would identify it. And to give this whole thing a bit more background story is that we are currently building up a support area as well. So we could see price melting down all the way to this low. And mark my words, I say we could see. So we're never sure on what will happen next, but I would say that the internal structure is stepping down bearish, but it's reacting from this area. So this could be a pool of, so to say, liquidity, which I will show liquidity where stop losses are in the market. But we can see that the current structure has been broken here as well. So this is for the weekly. So let's say the weekly is from this high all the way to this low. Let's see how the daily is playing out, right? Because now we have to understand again what our external ranges are and our internal ranges are. And we can clearly see that this high all the way to this low is our external range. This is the main range where price currently is trading in. And what we can see is that internal price action is stepping up bullish, right? So to have an understanding of where we're trading and what price is telling us, we could identify our structure. So we have a low, we have a high, we have a lower high, a lower high, and we have a higher high. And now I have to look a little bit more close because I think this is a high, this is a low, this is a higher high, this is a lower high, this is the higher high. So our current range on the daily, let me delete these things, is all the way from this low to this high. So the daily currently is bullish. Although the main weekly range, the main external range could be bearish, internal price action on the daily tells us that price is bullish and it might want to go to areas like this, or even top areas like this, or minor areas like we see here. This is unmitigated. So we could see price stepping up into these areas and then see a potential meltdown from there. The only way that the external can be bullish is when price is make a new higher high. So external bearish, and the only way the external range can turn bullish is when we break bullish market structure, right? We should take out this high, can call that BOS, break of structure. But currently that's not the case. So let's put that away. Let's put this away. And now let's identify what the 4-hour might be telling us, right? Because this is important. We have to step down every time frame to get a very good understanding of what price is telling us and what direction price wants to trade in. Well, to take account of a few things is that we can see that we have a massive imbalance over here. So it could be logical for price to trade into this whole area and then make a new high. It's a possibility, it's never a certainty, right? So price could also break bearish structure and go all the way towards the downside. We never know. This is also depending on how the economy in America goes, because the dollar index is leading here, and whatever happens in the States, whatever happens with world dominance is definitely have some influence on this chart. For our trade setups, it doesn't give a damn, to be honest, but for a higher time frame narrative, we have to understand a little bit of those macroeconomic events. All right, so daily we have found, right? We have a low and we have a high. Pretty easy if you ask me. Now the 4-hour is getting a bit more interesting because 4-hour structure is stepping up bullish. So let's identify all those breaks, right? We have a low, broken. We stepped up, we came down, 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 and we stepped up again. So currently we could say that our 4-hour range is turning bearish. And this is very interesting to understand because yes, we're turning bearish because to identify our range, we take the last low and the last high. So this was the last 4-hour bullish range. And that 4-hour bullish range has been broken bearish. We have a bearish break of structure over here. But we have to understand that there is more to only market structure, right? What can we see as well is I see a lot of wicks thrown around these lows. And price has to take some liquidity in order to move in the opposite direction. And we can see it time and time again. Price takes lows out and then moves in the opposite direction. This is nothing new. You will see it less on the higher time frame and more on the lower time frame. So this is why I use liquidity so much in my strategy, because those 15-minute structures, hourly structures, are very often not holding. And then we can do the opposite thing, like the way I trade. Definitely watch my other YouTube videos where I explain more about what my strategy really is. But now let's stay to the basics of market structure. So what could be a logical thing for price to do? Well, we do have our last order block over here. We do have some major imbalances as well. So price could easily trade into this area and starting to show more bearish price action. So market structure is very important to understand, but let's give a clear understanding of what the hourly is doing and also what would be our external range right now. Our external range is from all the way to this low to this high. So the daily is bullish whilst the 4-hour is stepping down bearish. Currently, this can change, but for now it's stepping down bearish. The hourly structure is almost the same as the 4-hour structure, because this is the last low that made the last high. This is where the break of structure occurred, and we have to break this structure in order to turn bearish. Now, don't get me wrong, and this is where you need to backtest this stuff a lot. I went over many charts time and time again. Just mark out every break of structure, every high, every low, which one is important. You have to study this. This is not something you see one video, you will get it completely. Again, it took me a year to fully understand it and fully master it. So give yourself the time, allow yourself the time you need to get this thing fully understanding. All right, so knowing that we have price stepping up, and to give you guys an understanding, again, what is internal structure? Well, this is internal structure, right? This is our main range. That's what we know. Our 4-hour range is bullish, but internal structure is showing us that there is a low here as well. So how can we identify early where price wants to go? Is that if we see price breaking early internal structure like this, it shows us that price might want to go for the external structure, right? External, main range, internal is trading within that range. So this is our hourly bearish range. Well, the 15-minute can be way different. So let me delete these things off the chart. The 15-minute is, we have a high in the market, we have a low in the market, we have a lower high in the market, we have a low in the market, we have a lower high in the market, and a lower low. So currently we could say that our 15-minute range is bullish because we broke bullish market structure. All right, this is very important. This is how you can identify. And this happens time and time again. And what I could see happening right now is that price completely melts. Because if we break bullish market structure, what happens? Well, SMC traders, market structure traders, Fibonacci traders, well, all those kind of traders, I think, well, we're in for a reversal. We're going to target that higher time frame order block. Price must trade into here in order to move down. And those traders make assumptions in the market. And making assumptions in the market is just the wrong way to look at it. Anything can happen. And inducing other traders is definitely something that happens lots of times. So this was GBP USD, a complete breakdown from the weekly to the daily to the hour, 4-hour, hour, 15 minutes, and we can even drop it into the 5 minutes. You will see that 5-minute structure is different as well. We have a low, we have a high, we have a low in the market, we have a high, higher low, higher high, again, lower low, higher high. So you can see that those lower time frame structures are holding way less because they're ping-ponging around, they're taking traders out, they're taking liquidity from the market. So that's why you should watch my video about liquidity, because then you will get an even better understanding of how market structure and liquidity are so much in line, and you can use that to your advantage, definitely. So yeah, this was GBP USD, and let me draw a little thing on the chart to explain those internal and external ranges, right? So we have, for example, the 4 hours stepping up bullish. So we have an external range, which is from this high, from this low all the way to this high. This is always what we call external. This is what we call internal structure, right? Internal structure, break of structure. So external range, internal range. So we have to take account of our external ranges, where are interesting places, right? There could be an order block here, there could be liquidity there. So this is how, for example, the 15-minute would look like in those charts. So for example, there is liquidity below here, liquidity below here. We take that liquidity out, we coming into an order block, market structure stepping up bullish, breaking bullish market structure. Now we have a clean understanding, we have a good narrative where price wants to go. Right now, price might be going for that high to make a new external range. Well, what would be the external range be, right? And this is our external range, price stepping up, price stepping bullish. And now our internal range is beginning again, right? We create equal lows, coming up, sweep of equal lows, moving. Where would those equal lows be? Of course, here would be the equal lows, sweep of equal lows, bullish break of structure, and we can continue in our direction. And this is honestly everything you need to know about market structure. This is, if you can master this, you're already for 50% there. Honestly, this is one of the most important things. And later on, you will learn that market structure mainly is not holding. It throws out lows to take liquidity from the market, because all those stop losses will be down here. Again, this is where people went long. This is where institutions came in, because they have the power to move the market. So imagine how many stop losses are below. Every low in the bullish range holds liquidity, because from every low there is so much buying power, in this case bullish scenario, so much buying power, the price just rockets off. And if there's loads of buying power, there's retail traders, institutions, banks, hedge funds. Well, all those big players are coming into the market as well. So this is a good understanding on how market structure work and how internal structures work. Let's dive just into another pair. Let's do another pair. So for example, EU, starting on the weekly, we have to identify what our weekly structures is, right? We have to identify. So coming on the weekly, we zoom out and we know that this price action is not important to us. We can do nothing with it. It could be years for this high to be taken out, or for this major support resistance area to be taken out. It could be taking years, and we're day traders. We find trades on the 5 minutes, on the 15 minutes, targeting opposite liquidity. So we're in and out, honestly, mainly in a few hours or less. But identifying the structure again. All right, we have a high and we have a low. Why? This high broke previous market structure. Right, let's put that line out, break of structure. All right, so this is our external range. Internal structure is showing some pretty interesting things as well, right? So what can we say about the internal weekly market structure is that we have a low, we have a high, 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 and we have a low. And what happened here is pretty interesting, because we broke bearish market structure, right? So you can see how clean price is stepping up, making higher highs and higher lows. Then we break the last low, so previous market structure. Ever since we had builds up of liquidity over here, we take out that liquidity, we came into the last area over there, you could definitely say it's something like this, and price made a new low. So look at this. Now we have it even more confirmed. We have a high, we have a low, we have a lower high, and we have a lower low. So to delete everything, this one here, this one there, this one gone. So current internal range is pretty easy. It's from this high all the way down to this low. So clearly we can see that our external range is bearish, our internal range is bearish as well. Pretty interesting if you ask me. The daily, what will the daily tell us? Well, we know that this was our internal weekly bearish range. And when we drop down a time frame, suddenly this becomes our new external, right? So this is our external range and price is currently trading within the internal range. It's looking pretty clean, to be honest, right? So what can we see is that price was stepping down. This was the last high that created the last low over here. Then price stepped up bullish. Price came all the way into that last order block or whatever, and it started to show some bullish price action. But now the interesting thing comes. What is our daily range currently? Well, since we have never broken this previous market structure, we're still currently trading within this daily bullish range. Only when when price is making a new high over here, only then we can say that this becomes our new bullish range. So this is very important, and this is what very much people get wrong, and this is what, when I teach people about trading, this is where the big misconceptions lie. They think that this is already the bullish range, which is incorrect, right? So currently this is the bullish range, and only when we break the previous market structure, we're becoming in our new bullish range. All right, so that's for the daily. We have identified our daily range, which is from this low to this high, and everything what's happening in between is now what we call, we're jumping to the 4 hour. This is our external range. Remember, this is our daily bullish range. Now the 4 hour is, trading in that range. So in that external range, price is now trading in internal price action and clearly is stepping down. So what can we see from price? All right, we first had our first bearish break over here on the 4 hour. Price came up, price came down, price came up, price melted all the way. This was heavy news. And then price broke bullish market structure. How can we tell? Right? Because this is the last low that made the last high that made the last low. So what we can see is that we break bullish market structure over there, like this, and then so we have bullish market structure. But then again, what happened, right? Price was breaking bearish market structure time and time again. It probably came into a lower time frame POI or order block, and from that moment we can see that price is dropping down, coming up, coming down. So here we broke bullish market structure again. And ever since, we were stepping up quite aggressively towards the upside, towards the last POI or the last order block in the range. So interesting enough, we could see the price was stepping up, but currently what we see is that price broke bearish market structure. Why? Because this is the last low that created the last high, and this is what we broke. So we could say that the 4 hour on Euro USD currently is bearish. And this is what we see, because we see currently some bearish price action coming in. All right, now let's look to the hourly, right? So remember, this was our range, our external range. We broke bearish. And we can see how clean price is stepping down towards the downside. Currently trading into this major POI. I don't know if this is a good area to buy. This is no advice to get into any trades whatsoever. But currently our hourly range is from this high to this low, because this is the last high that broke the last previous structure. So this is how you identify where you're currently trading at. So bearish price action. So what should we do, right? With selling, waiting for price to come into this area and then sell off again. Because that's what market structure tells us. And remember when I said that higher time frame market structure holds more significance than lower time frame market structure. And this is what we see quite often, is that price takes out, for example, this liquidity area. We have a resistance zone over here, breaks bullish on the hourly, even 4 hour maybe, and then completely melts down again. So this is more about liquidity, about trend lines and stuff. As you can see, I've already built the trend line, drawn it in, because I think it has a high chance of being taken out anytime soon. I don't know when, could be this week, could be next week, could be the week after. That's for time to make the decision. For me, I want to know where I'm currently trading at. So hourly range, pretty clean, is from this high all the way to this low. All right, 15-minute structure. So we have an external hourly range, which is from this high to this low. And we can see that internal market structure is stepping up bullish. Why? We have broken previous market structure. So we have low in the market, we have a high, we have a higher low, and we have a higher high. And this is confirming that price might be stepping up towards, for example, this area, and it's going to step up bullish again, coming in, breaking bearish, taking all those sellers out, and move in the opposite direction. I don't know. That's, again, more to the liquidity video. Definitely watch that video. It will help you so much. But this is what market structure really is. And if you can master this, then this is such a good base level to grow into more of the trading you want to do, to become that more experienced trader, because you will see, again, that market structure mainly won't hold too much. Only higher time frame market structure will significantly hold more. So yeah, we covered GBP USD and Euro USD as of market structure, external ranges and internal ranges. If you guys have any questions about this session, if you have any feedback for me to improve upon my videos, please let me know in the comments. I'm happy to go over it. I'm happy to improve the videos and the content that I make. Hit the subscribe button for more of this video, because there's definitely coming more in the near future. Thanks for watching. I'll see you on to the next one, and have an amazing day. Cheers.